Welcome to StockMarketFunding.com, home to the professional, home to the beginner, and home to everyone alike. Meaning that you don't have to have any experience to make money. You don't even have to know what the market's about. You'll come here, you'll get into school, you'll go through the day-to-day operations and the day-to-day training, you'll make a lot of money. What we're going to show here now is a weekly chart. And we're going to talk about where the exuberance part of the crowd was. And basically on our website on StockMarketFunding.com, Rick Goley was here on right up here. We sold short 4 weeks in a row. We also did this trade. If you would have only had 10 contracts, would have paid you 100 grand. If you had 50 contracts, you'd have made $500,000 in that 4 weeks on 50 contracts. We bought these at $22 and they went to $125. That was back on that January top. What we're talking about now is that we've come back again to do what we call we did a short last week. And what was that short based on? I'm going to show you. Number one, the exuberance, the bulls get all in, okay? And everybody that was late to the plate, and international fund managers that have been on the sideline started to come in and buy our markets. Part of the move here was the anticipation of good earnings in the S&P. And they've all lived up to it. We told everyone that. But here's the problem. On that last weekly bar, this is called the inside week. This is the outside week. Last week's training sessions, it's on the website, we were 93.68% overbought. And that meant that we were at an extreme. And the higher and the more overbought we get, and we peaked right here on the weekly MACD. And basically, I'm not going to go into it on this tape, but in the school we have mathematical ranges with weekly moving averages. We have a way of knowing where this blue bar is called the MACD. Mathematically, you hit 41.173. And we were totally overbought on the contract. Right. So basically, when we decided to short the 1210 put, is that we were using the weekly overbought scenario, which is an extreme area where everyone got crowded in. Notice that the green line right here is a 200-week moving average. But one thing about the 200-week moving average is that the 200-week moving average mathematically has been declining. Even though that you've had the big up move, these are things that we teach. I can't go into it here, but there's a formula that we use that when you got a long uptrend, but you got the 200-week moving average declining, when you have it declining in price movement, that means that this whole move is acceptable, meaning that you can't decline in the weekly moving average. And we came up right below resistance, and we took a short that I put in the other films. And what I want people to know is that during the trading week, there was 2 days during the week where we had the big down move and the counter trend that we did with that S&P. But let me tell you something, people. My closing price on the S&P is 1186.89. My previous inside week, my closing price was 1217, people. Now, the thing about it is, the inside week is that you got a lower close from the inside week. And there's a distribution in play based on that top. This whole stock market, if you go back, you go to StockMarketFunding.com, I showed every single sector in the market. I showed every single index. I showed all the bull funds. I showed all the bear funds. I showed all the mathematical imbalance between bear and bull. And you know what? We have called the tops every time. We also called the bottom over here when the sellers dried, because we did. And that means the amount of exuberance is quite evident at 93.68% on a weekly overbought level. The CCI has been declining within the move up. Now it's 114, it's 84.9. It's still positive, but let me tell everyone that I told everyone last week. Exuberance or the bull is not broken one day. And as I said on that first reversal, the reason why we bought the 1180, 1190 calls and sold out on the 12 put is we understand the behavior in the two parties. And basically, this upcoming week is we're going to be heavily economic data. We're going to have out the unemployment number this coming Friday. We got a slew of things coming out. They're going to pump the retail sales, and they're going to try to suck everyone up here. This is the retail side of the move. You can't put a blow off top. There is your retracement. So here's the 41.73. I am right now burning at 41.01. That's a haircut. I went from 92.21 on that reversal down to 90.052. They popped it back up on a counter move on Thursday, popped to another overbought extreme level and dropped it down to 89.49. And you're not going to stay up here, people. There has never been one in my 30-year career or my historical research that says that a market is sustainable at these high readings. And we were ripe for the correction. If I show you on the monthly chart, I came over here on the monthly chart. And what I did on the monthly chart was I came all the way up and I tested the 40-month moving average and the 50-month. That's called a 40-month, that line. Sold right off into it. But here's the thing. On a monthly, even in ripping bull markets, I'm at 89.43%. That's overbought on a monthly, folks. Let me tell you something. Want me to go back to the best bull market top right over here? I was 86 at the high here. And yes, overbought and oversold have different formulas involved at certain kinds of tops over time. Over here, when we were shorting in 2000, we were at 70.83 in that cycle at that time, off of that 96 burn. And then over here, as I did the Dow history on stock market funding, it tells you how always that these moves fell. Now, between now and the end of the year, going into 2011 and 12, is we can pull back and continue to go higher based on the gimmicks and the economic indicators, based on the amount of stimuluses, based on lots of stuff. But I will guarantee you that there will be a third leg down. And I've said that in stock market funding on the Dow history, the S&P 10-year history. I give you a complete analysis of the 10-year history. Now, what I am going to tell you, rather we pull back and we end up higher before the next reversal, it's all going to be a trading range. But in the short term, we are more overbought within the bear market low to these tops than other previous bull markets in history on a monthly level on the S&P. And basically, we got resistance, and the 40-month moving average is still crossed over to 50 months, something you don't quite know yet. They're declining in price. Yeah, they are. They're right down here. And they haven't flattened off yet. Yeah, you've made the great move. The 10-month is crossed up. You're about to pop a monthly buy signal. Monthly sell signal, straight down you went. They're trying to get a monthly buy signal. If we do get a monthly buy signal, once we correct, then we could come back up here to the monthly pro trader bar, which is in your Dow S&P history. And that would be right across here. And that would put the S&P right up there around 1310. Okay? That would be your next move once we pull back. And if they pop this into a monthly buy signal, here's what happens when you go into a monthly sell signal. And people,